Ever wondered exactly how much cash you need to pocket $1,000 a month with options? Most traders guess or get lost in complicated math, which is why I built a tool that gives you a clear answer in seconds for any stock. So in this video, I'm going to show you how to use it and the simplest strategy to start hitting that 1K goal right away. And you can click the link in the description and start building your own trading plan in seconds with this free tool. Now, first, I'm going to show you the simple option strategy you can use to hit the 1K mark each month with a low amount of risk. Options trading is a lot like choosing the right vehicle. It all depends on your destination. Imagine entering a Formula One race driving a Honda Civic. You'd look ridiculous puttering along the track while everyone zooms past you. Worst yet, you'd be in serious danger if someone crashed into you because your car isn't designed to handle that kind of impact. Options trading works the same way. Sure, there are several ways to earn 1K a month, but not every approach is built equally, and choosing the wrong one can cause massive capital losses in your account. Ideally, you'll want a method that's low risk, easy to repeat, and gives you a high probability of hitting your goal without having to constantly relearn complicated steps. The simplest way that I've found is selling options instead of buying them. Let me show you why selling options makes earning 1K a month so straightforward that even my mom can pull it off. The first couple years of trading options were rough for me. I struggled to consistently make money buying options, often taking on unnecessary risks and relying too much on gut instinct versus solid data. It got to a point where I either had to quit forever or find a better way, so I switched gears and started selling options instead. The transition wasn't easy, but I quickly noticed something encouraging. My win percentage started to tick upwards. I focused mostly on selling put options on companies I genuinely wanted to own for the long haul, and I learned how to spot opportunities that gave me much better odds, often as high as 70 to 80% of success. After a couple more years refining this approach, I've boosted my win rate even higher. In this year alone, I've closed 95% of my trades profitably. Let me show you why selling put options is your simplest, most reliable path to earning 1K a month. I teach beginners a powerful framework called the Flip the Odds formula because selling options completely tilts the odds in your favor. Here's how it works. O is for odds. When buying options, your odds of success might just be 20 to 30%. But when you sell options, you immediately reverse those odds, typically giving yourself a 70 to 80% probability of winning. The first D is for delta. Delta is like your built-in cheat code. It simply shows you which strike prices, the price levels at which you agree to potentially buy shares at, offer the safest and most profitable setups. This removes guesswork, letting you confidently set up winning trades. The second D is for decay. Time decay is a silent killer for option buyers, but when you're the seller, every passing day quietly deposits more money into your account. Being on the right side of time decay adds to your likelihood of winning trades. And S is for stack. Once you have a winning formula, you simply stack one small, consistent win after another, compounding your profits over time. When combined, the Flip the Odds formula allows you to easily make trades with 2 to 3 times higher win rates compared to buying options. Now that you know exactly how to tilt the odds dramatically in your favor, the next step is figuring out exactly how much capital you'd need to generate $1,000 a month with this approach. Let's break that down. This is where my new tool comes in to help save you time, make this calculation in seconds. Grab your copy by clicking the link in the description. Make sure you save a copy and then follow these steps to break down how much cash you'll need to start earning 1K a month. You'll be starting with the inputs area, and the ticker row 2, is the first step. This is where you're going to enter the company stock ticker that you're thinking of trading, like a SPY, an Apple, a QQQ, or in this case, we're going to do Tesla. Once you've input the ticker, the stock price is going to automatically calculate for you. And there's usually a 15 to 20 minute delay on this data, but it's going to work for the purposes of showing you how much cash is needed to hit the 1K per month goal. Next, you want to find the strike price that you're going to be selling a put option at. Remember, we just talked about the flip your odds formula. We want to give ourselves 70 to 80% chance of making money with our trades instead of typical 20 to 30%. To do this easily, we can look at the delta in our options chain. And if we want a 75% chance of winning the trade, we can choose the strike price with a delta of 25. To do this easily, we will look at the put side of our options chain, then use our delta column right there to easily select the strike price with the risk that we want. And if we want a 75% chance of winning this trade, we would select a delta with a corresponding value of right around 0.25, which right here, 0.246 would give us a 70-ish 5% chance of winning the trade. If we wanted even better odds than that, we could use a 20 delta, like right here, a 0.198, and that would give us an 80% chance of making money. So whatever odds you want, just use the delta to guide you, then enter the strike price that corresponds with it into the spreadsheet and the delta amount as well. Let's select this 3075 right around that 25% delta and put that in the spreadsheet. Strike price of 307.5 and a delta of 0.248. After that, enter the number of days until expiration. I've got a weekly expiration right here, about 8 days. I'm going to put that in the spreadsheet. And the last step will be entering the premium into our spreadsheet, which is just the midpoint between this 510 bid and the 520 ask for this 3075 strike price. So let's go 515 and put that in our spreadsheet. 5.15. And just before we look at the calculation section, let's do the same thing for a monthly expiration on Tesla in this column right here. We're going to adjust our expiration date and go from 8 days out to 30 days. And we're going to look for the similar delta of 25. We're going to go 26 right here for the 295 put at 30 days to expiration. So let's put that number into the spreadsheet. Our strike price for this one, 30 days out, 295. Our delta of 0.260, giving us a 75% chance of making money with the trade. Expiration is 30 days away now instead of 8. And the premium per contract is between 1070 and 1085, 1090. So let's call it right around the 1085 mark right now, 1085. Boom. Now I've preloaded this spreadsheet with some monthly and weekly expiration contracts in here just to show you the difference between the two. And if we start to look at the numbers, you're going to see something down here in the calculation section that's pretty cool. So first off, you're going to see your estimated win rate based on the delta of the strike price that you selected. Then you're going to see the number of times you can complete this trade each calendar year, which leads us to the premium per year per contract row, which just tells you how much you can expect to make with one contract repeated over time for a calendar year. That yearly number is then broken down to a monthly figure for you, and it shows you how much you can expect to make per contract per month. As an example, the SPY, the S&P 500 index, one contract at 599 strike right now currently would net you about 555 and change per month. So then what the spreadsheet does, it calculates how many contracts you would then need to sell, which is 1.8, to hit that 1K per month goal. We can't actually sell 1.8 contracts. We have to make it a round number. So we round it up to 2. We would need to sell 2 contracts to hit that 1K goal. Well, how much is that going to cost us? Okay, we know the capital required per contract for this example is 59900, or just shy of $60,000. We take 599, the strike price, multiply it by 100 to get this number right here, shown like that. And then because we need 2 contracts to hit our 1K per month goal, we multiply 2 by 60,000 and get just shy of $120,000 to hit that projected income of 1K per month shown right here. As you can see, the weekly expiring contracts in the green columns gets you there with less capital compared to selling the monthly options. You can see Tesla 30,000 versus 60,000, Apple 79,000 versus 117, and the SPY 120 versus 236. So there's more cash required when you're selling the monthly options versus rotating your capital every week. But why is there such a difference from the cash required when you look at stock to stock? Apple to Tesla, QQQ to SPY. Well, let me show you so you can fully understand the risks of selling options. Selling stock options to earn $1,000 a month is a lot like renting out a beach house versus apartments. Beach houses or high volatility stocks command higher nightly rates because their demand fluctuates a lot based on season, based on weather, and even popularity. Apartments or low volatility stocks, meanwhile, rent for less per month but provide steady, predictable income. To hit your $1,000 monthly target renting apartments, you'd need many more units or more capital invested. With beach houses, though you collect higher rents or higher option premiums due to volatility, you can get to your $1,000 goal with fewer properties or less capital. But here's the catch. A beach house stock like a Tesla or a Coinbase, their prices swing more widely, meaning you might end up owning shares more often or get assigned shares compared to a stable apartment-like stock such as the SPY, the SPY, or the QQQ. Taking more risk pays more, but it also increases the chances that you'll have to buy the stock. That's why it's crucial to understand your personal comfort with risk. But the big question you have to ask yourself is, am I comfortable owning shares of stocks that I'm selling these puts on if the trade goes against me? If the answer is yes, beach house stocks can be powerful and capital efficient ways to hit your income goals. If not, the apartment style stocks might suit you better. And that leads us to how to use the spreadsheet for yourself to get the maximum value possible. First, grab a copy from the link in the description of this video and follow 3 easy steps to create your 1K a month trading plan in seconds. Number 1, list out the companies you want to own long term being 2 to 5 years. Number 2, look at the option chain for these companies and plug your numbers into the spreadsheet both for monthly and weekly expirations. Remember to use the flip the odds formula and the role that delta plays in your chances of winning your trades. And number 3, assess returns and see how much cash you would need to invest based on each company that you've picked. Continue to play around with the expiration date and strike prices without taking on more risk than you're comfortable with, and easily calculate how much cash you'll need to start earning 1K per month trading options. But here's the thing. Even though you now know how much money it's going to take you to make your 1 grand per month trading options, there's one more step that you'll need to master, because if you don't, the numbers you just calculated, they won't mean a darn thing. So watch this video next where I'll show you how to sell puts step by step so you can start earning your first 1K today.